Welcome traders, my name is Adam Harris, Chief Market Analyst, and today's date is the 16th, but I'm recording this for the week commencing the 18th of December. So essentially we're pretty much done for the year. There's not a lot that's going to really happen between now and then. There's very few opportunities for traders. It's not really worthwhile engaging in the market. Much better for us to take a bit of a breather. However, I find myself usually, because I have more time on my hands, I usually find myself doing a bit of analysis anyway. So I'll make the decision, but there's possibility I might just produce the video because it takes me about 90 minutes and I'm doing the work for myself anyway. But I'm not trading. I'm just doing more analysis, more relaxing, writing a book or doing other kinds of things. So looking at the economic calendar for the week ahead, really, yes, sure, there's unemployment claims coming out of the US. Overall, the economy is doing really well. Actually, what I find interesting at the moment is looking at the Bank of Japan, just trying to see if there's anything they're going to do there with regards to monetary policy statements, if they're trying to make sure that it comes back more in line with what they want with regards to the exchange rate, which it appears to be doing that. We do appear to have quite a bit of weakness on the yen crosses, and they do appear to be heading lower, so that makes everyone pretty much happy. So right now, everything seems good for pretty much everyone except the Ukrainians, who are obviously still battling off Russia. So that's going to happen over the holidays. But right now, what I mean by that is everything else seems to be relatively peaceful aside from that. So that means we could probably go into the holidays not having to stress about the world ending, which is always what the media makes it out to be. So let's go across and have a look at the charts and see what else is going on there. Okay, so starting off with the VIX. It's still operating near the lows. Markets relatively calm. Economies, or at least stock markets, appear to be doing well. So like right now, life is, I'd actually like to do an exercise. I'd like you to think about, evaluate kind of your life at the moment. Is it really, really terrible, or is it really good, or is it fine? I mean, very few people will say, oh, I'm exactly where I want to be. I'm still on the journey. But I also think we've gotten into a bit of a habit in the last few years. This is a generalization, by the way. It doesn't apply to everyone. But we tend to have been the media has convinced us that life is just terrible, and I'm not really sure it is, So at any rate, well, I hope for most of you life is good at any rate. So now let's go ahead and have a look at the dollar index. Turns out you can't really suck a sweet and do a video recording at the same time. So this is a particularly nice response when we get this on the dollar index combined with bullish divergence. It tells me that there is a strong possibility. Let's put it this way. It tells me that the market is now going to try to turn around. And so we get a bit of bullish candle here. Usually what we'll get at that point is we'll get an attempt where the market would, and I'm going to put it here, so there'll be where the market will attempt to push a little bit higher. We might find that we get a little bit of a double bottom potentially, or a slightly lower low, and then it starts to move up. And interesting, because I just noticed there's a bit of an upward sloping trend line on the monthly. We're still range bound, so we're now heading towards the bottom of the range, and therefore bounce to the upside is very feasible. In case you're wondering if that's happened a lot before, if you go and have a look at euro dollar, we have a look at the monthly. The last time we had a really, really kind of big move, which was here 2014 into 2015, we stayed within a range for several years, okay, 2-3 years. And so potentially that's going to happen now. We've had a really big move, very big move. Maybe we'll stay in a range for the coming year. We'll have to see how that goes. Just be prepared for it. So we had a very strong rejection on euro dollar on Friday. And this is a double top. All right, we've also got bearish divergence. It doesn't really matter because you have a slightly lower high. You can see here it's a double top. We've got a very strong rejection there. Combining that with the dollars hinting at a potential push to the other side, I think it makes sense for us to expect that at least this coming week, the euro dollar will come back down towards these lows potentially. Might try and take another run at it and then have another rejection. Again, there's only like 2 or 3 different ways the market can play out, but it is definitely showing signs here of wanting to do a deeper correction or change in trend or a bigger pullback on the daily. Looking at sterling, so sterling here has got bearish divergence. So there we go. We've got a lower high on the MACD, and we've got a higher high on on price, a lower high on the MACD, and most importantly, we have got the very strong rejection candle there as well. So it's not just there's a variety of things that all happen at multiple levels. There's a level here, a level here. Multiple things have happened there. And also you could see that's a historic level. So there's lots of reasons why we might just get a deeper pullback. We might not actually get a change in trend, but we might get a deeper pullback and then have price test this level of support, then ping back up. Aussie dollar against the US dollar starting to fail a little bit over here. A little bit of bearish divergence. I'll comment on that, but I'm not as convinced until I see an actual strong rejection candle. So I'd be looking for a bearish red candle to occur here at some point, something sort of like that. That would then be a signal that we're going to head low, which could happen on Monday. So we'll see if that's going to be the case. Kiwi dollar also, you can see struggling a little bit at this level over here. So battling a little bit there, a little bit of bearish divergence there, some failure. But overall, I would actually say Kiwi dollar looks bullish, even though it has technically still a downtrend on the monthly, low highs, low lows. That weekly has just done a bit of a reversal and it looks somewhat bullish. Looks as though it's testing support and wants to head higher. So that's interesting to me. We might see a bit of divergence there. Kiwi and Aussie might go nowhere, Kiwi might go up, and Euro and GBP might head lower. Dollar yen, you can see just having that much needed correction, and it's now entering an area where it could potentially find some support. Let me just mark that area. So it's usually going to be something like this. This is where I would expect it to potentially turn around. We'll see if that's going to be the case. If we start getting a stronger US dollar, excuse me, it is not unreasonable to think that the yen pairs will start to climb again, and only because that's something that we have seen consistently over the last several years, maybe even within the last decade. Dollar Swissy here, also starting to produce a bit of a bullish inside candle. We've got wicks along the lows here and some bullish divergence. So again, another sign that there could be a possibility for a stronger dollar this coming week. We'll see if that's going to be the case. Also, again, it's range bound. You can see it's range bound here, so it's at the bottom of the range. Lot of things pointing to that. Whereas dollar CAD here looks like that trend is pretty much happy. It might get a bit of a bounce up and then a continuation to the downside. Let's move on and have a look at precious metals. So we've got gold. All right, so gold got whacked on the nose from the highs. Pretty strong bearish close, not right at the lows there previous week, I beg your pardon. And then this coming week, there was a really strong, this is off the back of the FOMC, a nice big strong move off that, and then a little bit of a stall on Friday, so battling up with resistance here. So if we get that stronger dollar, we could possibly see gold start to hit a little bit lower. This is what I'm going to say here in isolation. If you exclude the current candle, so if you exclude the current candle here, this looks really nice and bullish. Looks as though it wants to continue up. We do know that in this particular current candle, if we bring it back in, it has already broken through that level. It just hasn't closed to that level. And we still have, ladies and gentlemen, about 2 weeks before the end of the year. So it's not impossible. The gold is going to go into a little bit of a coma now, so it might just stay where it is. But if it does decide to keep pushing up here, I would say with sort of greater than 50% chance that gold is very happy where it is and it wants to potentially go higher. We've reconnected with 1940. We pull back to the previous levels here. So for the most part, I feel like we're within a nice value for gold, and I'd like to see it continue to go up. So when I say that, that's not really a fundamental analysis per se. It's not really based on any figures. It's based on the ebb and flow of gold and its testing of support levels and its overextension and just that general ebb and flow of price action. That's where it comes from. That's more experience, I guess, and intuition, which is more fast thinking. So by the way, I really recommend, if you haven't, took me a long time to get round to it, Thinking Fast and Slow, got the book somewhere here. Really recommend that you get through it. There's some amazing books I've been reading lately, so I really recommend. This is a great time to go through audiobooks if you're outside or at the gym. So a retest, we've got an indecision candle here. We've got wicks, equal wicks above and below, so it's a spinning top, and it's potentially doing that at support. So if we break the high of this, I'd expect the price to hit a little bit higher, and we break the low. So this is one of those situations where monitoring the high and the low of the weekly candle, you could do it obviously all the time, but in this particular case, because we're in an uptrend and it's sort of got smacked back down, but it's also generally bullish, it could go either way, and therefore watching the high and the low of the weekly candle or break above and below should give us a confirmation of which way it's going to go. Could you potentially get a break of the upside and then an engulfing candle? So in other words, you get an outside candle and it reverses, so it breaks the low, but then reverses, it goes higher, or breaks the high and then reverses, it go low. Yes, you can, but that happens less often. That doesn't happen 50% of the time. It probably happens anywhere from 10 to 25% of the time. So in other words, if we break the high or the low, that really should be enough, especially if we start to see that there's supporting price action. So we want dollar to be weak if that helps boost gold. So if we are getting a really strong dollar, you can see it's probably going to come under pressure, but if we're not, it's potentially going to help it. Okay, so silver doing relatively well. By the way, I threw in a correlation. I used the correlation tool here to correlate gold to silver, and it's got a 77% correlation. And that's like the average that I've seen for the last several years. So it's so consistent. It doesn't go, 76% correlation or 76 coefficient last month and now it's 77. It seems to be pretty consistent at 77. So I found that interesting, meaning that 70% of the time, potentially silver is going to do what gold's going to do, but doesn't have to otherwise. It's battling with a level here. Again, it's setting up bullish here, high, low, uptrend, and there's a break of the high. Should see it move its way up. So there's some hints at that. Let's have a quick look at coffee. Coffee's doing relatively well at the moment. Breaking up, you can see the wicks here and the wicks below, so that makes it sort of range bound. It's managing to push up a little bit higher, so coffee's doing okay, edging its way higher. We've got copper, which I should move copper up a little bit so it sits above. Come on, man. You're going to swap it out. There we go. So copper also a little bit of a bottom here and could find it's push its way up a little bit here. It's batting a little bit. So there's not a huge amount of appetite for this, even though gold has moved to all-time highs. That has also been kind of had a bit of a quiet year. So therefore it's had a chance to recuperate. Whereas copper and silver is, not necessarily the case. Now, I really urge you to do some research into looking why gold would be popular outside of as a hedge of inflation or a hedge against inflation. So many people are just like, that's their go-to thing. That's the only purpose gold serves is as a hedge against inflation, which is obviously, when you stop and think about it, that makes no sense. We use gold heavily in jewelry, obviously in banks as well, in terms of investing and in terms of currencies, as well as excuse me, historically it's just been in a demand. And so it didn't just suddenly move from being, our go-to kind of index for, I guess, value. It didn't suddenly switch from that to being only a hedge against inflation. That's completely ridiculous. And most people just can't let go of that idea. And honestly, it just isn't true. It may have been true at some point in the past. There may have been correlation, but it is not. Okay, so just thoughts on that. Natural gas continues to push low. You can see a retracement within the downtrend. Not much stopping it at this point. No real bullish divergence. Not much happening there. Let's have a look at where are my other things. Give me a second. Okay, natural gas. Now this is interesting to me. I'm on light crude here. Starting to look more and more bullish. So we've got a lot more candles coming in here. So within the last 6 or 7 candles, we've got mostly green ones. A little bit of a pushback there. So I think it's going to attempt to turn around. But the thing is, this is now testing resistance. So we'll see if that resistance holds. But when I look at crude oil as well, also very, very similar here. It's West Texas Intermediate versus light crude. It's also looking as though it wants to turn around. So these are early stages of slightly low, but then more a pushback immediately and then breaking the high here. So it might not be able to make it through this level of resistance, but again, if we get that, we get a bit of that, we might find that a bit of possibly a dollar or a shift in trend, we might see that comes through. Quickly have a look. Wheat, beautiful double bottom here. This is a really strong buy signal, and you can see it's already come back to retest it. So these are kind of no-brainer type of trading opportunities. Even a break and a retest, but that looks really good. So break above the high of the weekly candle, stop loss below the low, kind of targeting 3-to-1 or to the next major level. But in this case as well, there's a re-entry opportunity. It's kind of come back to here, so it's very cool. So very, very nice there. That's kind of a straightforward commodity setup there, and it's just price action based. Sugar having a bit of a correction. You can see it just failing in that area. It's come back down, so probably going to have a bit of a deeper correction. Let's have a look at it on a different time frame. Let's go up to quarterly. Quarterly doesn't really give me any more clues. It does say that we could come back down to 20 if we want to connect to those moving averages. Go back to the monthly. Yeah, so we might find that this comes back down to test this level of 17. We'll see if that's going to be the case. It doesn't have to, but if it does, that could ultimately present itself as a buying opportunity. Cotton. Okay, cotton's going nowhere. All right. Let's move on to the MVPs. So again, we've been running and potentially we'll just keep going until the end of December. It's possible it wants to do that. Obviously, and I would hope you agree with me, it's looking very overextended. It's had a good run on the weekly. It's now ridiculously overextended, but it's also a good sign of kind of the overall bullishness. It's optimistic for 2024. It doesn't really make sense that we would have 2022 be a terrible year, 2023 be, I don't know what's going on, and then 2024 suddenly bearish again. Everyone's going, well, anything can happen. It doesn't really work that way. The market, it's very slow moving, and so there have to be reasons why it decides to do something for a long period of time, meaning you have to have a correction or a recession or fear or something, but you can't constantly have different stuff happening every day. This is one of the reasons why thinking that the news is what's driving the markets doesn't really make sense, because then everyone obsesses about the news every other day and every month, because their fear is that it's going to change the trend, and that kind of, the market's going this way one month, but if that's bad news, it's going to change direction. And it isn't really the case. The market will form trends, because remember, we're animals, we're humans. I mean, we're creatures of habit. We can only buy or sell or do nothing. Those are the only options we could do. We tend to try and repeat what made us money before, and tend to try and avoid what's lost us money before. And because there's only so few options, actually, we don't realize it, but we tend to, and especially because we do it in a crowd, believe it or not, there are only so many things you can do. And if you do it in large enough numbers, somebody's going to win. If nobody's doing anything, the market's not going to move. If you're not doing anything, but a lot of people are buying, the market's going to go up. And if you're not doing anything and the people are selling, the market's going to go down. If you're buying, but more people are selling, the market's going to go down. So again, it doesn't really matter what we do. It only really matters what the market is doing. And the market's going to do what it's going to do. So I just wanted that was just a little bit of a reminder that the market right now is very, very bullish. It's recovered. It feels the market is behaving as though it is now okay, good. I've got the go ahead. We've had our correction. We're undervalued. We can now start to go back. Now there will be corrections. We will have a couple of months, probably September next year as well. It's going to be a terrible month, and everyone's going to think it's the next stock market crash because Septembers are historically bad. We'll have those throughout the year. We're probably going to have 2 or 3 periods where for a month or more the market is having a correction. But this time around, we probably won't see downtrends per se on the monthly. Okay, so S&P again, you can see here, for example, that on that monthly, that we might find that we end up just going all the way up. Again, excuse me, for the last couple of weeks, I've been saying we need a correction, and we do. But the market is now clearly just on fire and just wants to keep going. So right now, I'm just going to go, okay, look, if it corrects, which I'm expected to do at some point, fine. But the difference is that last week or the week before I was saying, look, it has to correct now. And usually at the beginning of a really, really big move, like when it's going sort of parabolic, you don't know that because it sort of accelerates. And so it's only now that you can see it just keeps wanting to go. It had a really fantastic week last week. Is it overextended? Could it afford to come back down? Absolutely. But now it's just going to be a case of, I'm really going to only see you in January, so I'm not really worried what it's going to do over the next couple of weeks. So here you can see a little bit of a beautiful breakout. Basically, this is one of the things I would do. I would be looking for opportunities. Sorry, if this is the first time you're watching this, I don't want to be annoying you. Most people who watch this, you know how I am. So you'd understand that probably what I'm about to do is drop a bit of a gem here, but I would say that obviously here is where I'd expect the really good opportunities to happen. So if there is a correction back down to a previous high, that for me would represent a decent buying opportunity. So again, it's never a bad thing when the market has a correction within an uptrend. It's a buying opportunity. Every entry into a trend is through a breakout or a pullback. That's it. So you need a consolidation to get the breakout, or you need a pullback. Those are the only ways you can get into the trend. There's nothing else. From a professional perspective, that is. Okay, so here the mini Russell is broken, is not out of the range. I'm going to up this. I do not consider it free and clear until we really get above 2,100. But it is looking good, guys. It's looking good. And again, what we could find is because the Russell 2000 has been consolidating for literally since May 2022, that will be, maybe a year and a half, almost 2 years. When it breaks out, I would expect it to move like stink, as the expression goes, 2,400. It's going to move because it would have just ready to go. Here you can see as well when we look at the FTSE, it's consolidating, but it looks good, battling a little bit to the upside, but it has managed to breach that downward sloping trend line. Remember that I only use the downward sloping trend line as a line in the sand, so that if we're below it, we're probably bearish. Once we start to breach it, we're definitely not weak. It's not a sign of weakness. I know a lot of people use moving averages and trend lines in terms of they have greater relevance to some folks than horizontal levels. My argument, because we can all make our case for it, my argument is because the market's about price, before charts even existed, price was there, price was always there, which means that horizontal levels and price therefore become the foundation for every single level of support, and therefore everything else is secondary to that. Meaning, if I have to choose one particular indicator to use as support and resistance, it's always going to be price, which means it's always going to be a horizontal level over something like a moving average or a trend line. I would use those as secondary or supporting indicators. And it's interesting because I actually went for a long time without trend lines. I removed them, and now I've reintroduced them to me in an incredibly powerful way. In the way I use them, they're almost like an alert. Once it breaches that, I'm like, I can start watching it because then there's a potential new change of trend on the horizon. And I have found that to be incredibly reliable. I don't know about you guys, but for me, I want my indicators and the tools I use to not just be a 60-40 kind of does it work, doesn't work kind of thing. I want them to be 80-95% kind of reliable. So when they do that, it's part of a whole stream of things that I need to be looking at, never just one thing. DAX looks good. DAX again could find itself pulling back down, even down, as I said, to 16,000. I think the levels I've highlighted might still stand. Even though the market's gone higher, those levels could still stand during a retracement. Very, very strong period for the ASX in Australia, looking good. But it's going to have a battle with this. But I think considering the higher lows and the general pressure, I think it's reasonable to expect that in 2024, 2025, we're going to see that breakout to the upside. Okay, and the Nikkei, overall, I'm relatively happy with it. It's a nice pullback, and it's got a battle with this level, but it also potentially is going to form a bit of a breakout. We've got a beautiful inside bullish candle. So it's not completely outside of the realm of possibility we could see this breakout. Okay, potentially. So I like the look of that. I think maybe what I would do over the holidays is just keep an eye on these, looking for pullbacks, because they could happen if the market decides to take a bit of a breather. That could trigger the pullback, and then it could take off on January the 1st, boom, it just takes off. So I wouldn't want to just not look at the charts, but I wouldn't want to sit here actively looking for a trade. Just checking it on a daily basis to see what the markets are doing. If they keep going, the thing is, if they really keep going and they're ridiculously overextended by the time we start the year, then they're going to pull back after that. All I don't want to do is miss the pullback. I don't want to miss that. Or the breakout. All right, Apple. Looks fine. Look at that. It's tricking up. Just look at the weekly candles. They're, consistently higher lows, higher highs, closing higher. And it's now kind of free and clear of this. So for the most part, looks good. Okay, means just continuing. That looks beautiful. This is really good. So why is this so good? Well, because we had a level of here with sort of resistance. We broke through, retested it, and produced a nice bullish swing low. So yeah, it is coming into another level where it is right now. But again, it's not that overextended. And it's got another level that can work its way up to 164. So it looks good. Amazon, man. And so the only other thing I wanted to mention about Amazon was I have a... not a brother-in-law yet. Hopefully, maybe we'll see. Fingers crossed if he proposes, gets his act together. Who worked at Amazon previously, and he left around about this period here. And then ultimately, this was a big correction, and I was kind of a little bit concerned that we have a much bigger correction, and it's fine. It's absolutely fine. When I look at Meta, and we'll look at Meta in a moment, really big correction, and it recovered for the most part from that. So this is what makes sense. This is the most logical approach to that, is that we would have bigger corrections, not necessarily because of the companies. Because remember, we had a rising tide lifts all boats right now, so everything's being picked up by the bull market. We had a bear market, and during the bear market, everyone just offloads their portfolios. And so it actually makes sense that it's ridiculous to think that everybody has exactly an equal proportion of Amazon shares, Meta shares, Facebook shares, Apple shares. There are some shares that are simply more attractive to institutions. So you're not even talking about individual investors here. An institution, hypothetically speaking, Cathie Wood's ARK, for example, she was mad over Tesla and Nvidia, as an example. So she would load up on that. So an institution might actually buy more of a particular company stock. And again, they might during a bear market panic, as she does, and offload stuff, which would then basically cause an oversell of a particular stock. So during a bear market, the distance that the individual blue chips move, to me, if one moves a little bit and another moves a lot more, yes, potentially it's an indication of one company being potentially stronger than the others. But if everybody's crashing and one happens to move a lot further, but inherently it's a really good business, then the way I see it is it's just potentially one or more institutions or individuals who have with a larger proportion of shares have offloaded them, and therefore there's a bigger impact. In others, there's a bigger selling impact. But that's just, it's a hypothetical, but it does kind of make sense. It explains it away. Okay, AT&T battling with this level. Okay, so they're still within a range up here and a downtrend, lower highs, lower lows. But for the most part, they're just trying to get above this level at 1650 and above that 50-period moving average. it looks fine. Looks like it's going to keep going. It just doesn't look great right now today. So Cathie Wood's ARC will potentially break out from this range to the upside, and hopefully she hasn't offloaded some other gems in this. I used to be such a fan of ARC. Like, people were nuts about ARC the way that they kind of are about Tesla. And because she would interact and do these videos and explain the rationale and all the research and stuff they did. But when I look at the track record of how often she gets into stuff very late because it's doing really well and gets out of it right at the bottom, she tends to get in and out at the absolute worst amateurish times. And she's done this a lot. So it kind of makes me think that somewhere within the corporation, they get scared. You know, even the fundamental analysts make their mistakes. But I also want you to know that it also means that massive institutions can make mistakes, can get scared, can do stupid things. It happens. For the most part. Warren Buffett and Charlie Munger were always my weather vanes. They're always like, if they are calm and happy, I'm calm and happy. And that was just how we would do it. And if they were panicking, then I'd panic. And you need somebody like that. You need a canary in the coal mine. ASML looking good. It's just got to break past this thing, but it looks fine. Look, I need to mark that level, but I'm happy with that. Need to see it get past that. Glencore, still range bound. It should break out to the upside at some point. Tesco, just fine within the normal thing here. It looks good. Nothing else there. Just the trend is intact, is what I want to say. So if I just go look, no change, then it means to me the trend is intact. It should keep going. Same thing here. You can see a really nice Amex breakout there. Berkshire Hathaway. Again, a little bit of a bounce back here. So we'll see what's happened. But for the most part, we're still in an uptrend here. And let's see how the next week goes. It should potentially hold here and just keep going back up. Coca-Cola looks fine, except that I would mention it's still battling with this downward sloping trend line. So you know what? From this point on, it could come back down, test these previous highs over here at 56, 57, and then break out from there. We'll see if that's going to be the case. Should be okay. BP, just really looking weak at the moment. I need to see more bullish candles before it breaks out to the upside. I'm not seeing that right now. But if crude oil turns around, we'll see it bounce. Exxon here, you see a little bit of a bullish candle, bottom of the range. That's a good time for it to turn around. General Motors is back within this range. So there's a range over here. General Motors is back within it, which is a good sign. It means it was a failed breakout to the downside. Usually in situations like that, where there's a failed breakout, it goes to the other side to test that. So it will work its way up to the top. We know this. Okay, well, I know this. JP Morgan, pushing on, looks fine. Looks really good, solid. Adidas, trickling up, like a little bit. It's probably going to go sideways for a bit or come back down. Doesn't look super strong right now. I expect it'll pull back down before it continues up. Meta's fine. It's had a consolidation and a bit of a breakout. Again, I still really would have preferred a pullback to 250. Fine. Doesn't look like I'm going to get that just yet, but any kind of a consolidation for now would be good for it. Morgan Stanley, solid, really solid, nice break at this time. And again, broken through that downward sloping trend line, and it's breached this one. So what does that mean? It means the downward selling pressure is gone. It couldn't, if it was weak, inherently weak, it just wouldn't be able to get past those points. Trend lines, moving averages, Fibonacci levels, all these levels are where institutions and traders and orders are kept. And so, yeah, if a trend line holds, if a channel holds, it holds. But again, like I said, if you said to me, Adam, you could only pick one thing, it would be horizontal levels. But I'm not poo-pooing the use of any of the stuff, just the priority in terms of which ones I would pay more attention to. Okay, we can see NVIDIA continuing to push up. The weekly candle here in isolation. So have a look at this. Pretend we don't know anything else about it. What I do like it, nice range, bullish engulfing candle. We come up here, we produce a higher high. That's a higher high. And then we pull back, produce at the very first opportunity off the previous highs, we produce a bullish candle. For newer traders, this is probably going to throw you, but markets tend to, break out, come back and retest. So a lot of things I'm talking about might not make sense, but we're in a consolidation within a general uptrend. Price is ping-ponging within this range, comes down, fails to break up, pushes back, we get a bullish engulfing candle. Then it comes up and it creates a new high, which means from the bullish engulfing candle, it actually creates a fresh high, which means it's a good sign. Then it pulls back, and instead of coming back down to the bottom of the range, it stops at the earliest opportunity, which is the previous highs, produces a bullish candle and breaks the high, which means it's trying to break out to the upside. And so it's going to try and break out from here. It doesn't mean it'll succeed, but that is the earliest sign of it wanting to continue to push there. But now let's say we knew nothing about the history behind this. And this actually makes sense because remember, as a trader, you're really only looking at, you want to follow the chart in real time. So it's, you don't have to believe me or trust me, but it is a relatively reliable way of going. We can follow this without necessarily having to know the past. We can see what it's kind of doing now, which keeps us in the now, keeps us focused. What it looks like it wants to do now is to continue up from here. But what I was going to say is that in isolation, this was a potential buy opportunity. I found that interesting because it was a pullback and a buy. It might just be a trade buy opportunity, meaning that if it does break out from here, there's a 3-to-1. So trading versus investing, they are not the same things. Historically, a lot of the people that write the definitions out there are not really good at, they don't always, I feel, write definitions that make sense for people from the outside. The languages obviously can be a bit confusing. So a trade is usually a short-term, immediate move in a single direction, almost like a single impulse move. And it has an exit point. You absolutely will exit your trade. It already has probably a pre-designed or a pre-decided exit point, and you'll get out to that. Whereas usually with an investment, it's kind of time in the market. You're letting it bake, and it needs to increase in value. So in this particular case, a trade idea would be a 3-to-1 from there, stop loss below the low. But also, we are stuck within a range, which is a risk element. But if we went within a range, it would go up and we would target 3-to-1. That's a pretty standard trade idea. What's interesting to me is that we have so much bull market happening everywhere. And we also have a potential bull signal on NVIDIA, which has been a big performer. So the question to me is, will this be a buy signal for NVIDIA as a buy and hold, as an investment idea? In other words, as an entry into the investment. Now, technically, it's a trade idea, but in investing, I'm not really sure. Why do I say that? I mean that it's possible it could fail to break out, not escape the range just yet, and then ultimately go sideways before it does that. But I wanted to show you that. In fact, that actually in itself is also a buy signal. Believe it or not, this is a bull flag. So it's pulled back, low highs, low lows, and it's broken out to the upside. So there's a bullish signal, which is why there's a probability it's going to move to the upside. Okay. Then we have Netflix, which also has done a beautiful breakout, retest, and a swing low. Looks good. Trend continuation. PayPal. Okay, so PayPal is trying to test these levels. Not there yet. Remember, there's a lot it has to do before I would consider it. It has to get above 100 for me to believe that PayPal's future is changing. Spotify. Fine, it just keeps trickling up. It's battling here. So it'll probably pull back and then continue on. Trend intact. Spider's doing just fine. Beautiful, really nice double bottom there. Really nice, strong signal. This we know is going up to here for now. And probably a reversal. FedEx, nice trend continuation, intact. Tesla, look. Tesla on the monthly looks bullish. Okay, bullish candle, bullish candle, bullish candle, higher lows off the 50-period moving average, above the 10, 20, and 50. Bullish candle here. It's got the downward sloping trend line. Looks like it wants to go through and break through that. So remember, I'm only analyzing the stock. I'm not trying to pass judgment per se, and I can be, occasionally can be judgy, so I can be. But what I want to do here is for the benefit of people who own Tesla is just provide them the technical analysis on this and put aside any kind of opinion on Elon for now and Elon's behavior. For now, we still haven't broken out this way. I'm just telling you that there are more bullish signs than bearish signs at this time. So we're going to see. There were 2 million cars, they've recalled 2 million of their 4.9 ever produced, which is obviously not a great sign. But having said that, because we know there's quality issues I spoke about before, but having said that, this does not appear to be taking a hit. Now, a big part of the reason it might not be taking a hit is just because there's a general interest in EV cars and a rising tide lifts all boats. So we really have to accept that if the whole market's bullish, it's going to boost stocks that we might potentially, we might have issue with, but it does. So that's why if everyone else is going up and PayPal is struggling, to me that indicates there's some issues there potentially with PayPal. I can go and, you can go find it, but it tells you its behavior, it's splitting from the hood. And Vanguard. Vanguard looks good. It's going to carry on coming back to all-time highs. for the most part, looks like it's going to keep going. Trend intact. Walt Disney. Okay, Walt Disney again, still looking bullish. I like it. It hasn't turned around yet. I think there's your pullback. That's a buy signal. Again, beautiful break, retest, buy signal, bullish divergence, consolidation, breakouts. I mean, there's like a lot of bullish signals there. So, excuse me. But I would say this. It hasn't really turned around yet. Again, similar to PayPal, this has to break above a certain point for me to feel that its momentum is now way more bullish than bearish. And it's probably up here. So there are signs of bullishness now, but it might stall here and come back down and then bounce around. So actually we could find that for the next year, Disney's all over the place. Then we have a look at the 10-year T-notes. That's very bullish, very bullish here. I think it really is going to try and turn around. We're going to see if that's going to be the case. Eurobond also very bullish. I've been talking about this, but this has got bullish divergence. The MACD is trending higher and we've got a lower low there. So this is attempting to change its trend. So you'll see it here. It looks good. Okay, so that looks great. Let's look at cryptos. Cryptos had a bit of a correction. It's a nice clean correction. It might still want to come back down a little bit further. So we might see it come back down towards that 35,000 level. We'll see if that's going to be the case, but it has actually done a pullback now, which is good. So it could continue up from here. It's retested 40. So an alternative is that it hovers around here for a couple of weeks and then carries on. Ethereum was not as overextended anyway, so that looks good. It's the lower high here, but the lower high doesn't mean a change in trend yet. It's very important we don't jump the gun. It's pulled down and produced a small inside bullish candle, which means it could continue higher. So this level is really important. It might want to retest it and then continue up. Let's have a look at Solana. Solana's looking really good. That looks like that wants to keep going. Cardano. Do I think that this is the next bubble for cryptos? I think potentially yes. Cryptos have tried many times to take off. There's a lot of reasons why cryptos are not, why the world is not ready for cryptos yet. We have in many ways not advanced in all areas where we can go to digital currencies. Lots of stuff is still paper traded. Lots of countries are still there. There's 193 countries, something like that. I can't tell you how many of those have got this. And usually this is useful for most people who have access to a computer. So we're not really there yet, but the concept is real. The only question is it going to take us another 5 years, another 20 years? And also, are we going to just continue to see these kind of, this is a bubble, but it is a bubble. Why I say it's a bubble now is it's recovering now and it's a lot calmer, but it's also accelerating at a really fast pace, which is what it does. And if it starts going straight up, we know we're in a bubble. And again, when we get there, we'll eventually have another correction. So just be forewarned this time that if it goes straight up over 3, 4, 5 months, I'll talk about it here. It'll be a bubble, and then we'll look and see if we're going to get another crash, if we're going to see if that's going to be the case. I didn't really realize this until recently, how many people use cryptos as a gambling kind of mechanism. What I mean by that is there's a large number of people who buy and sell cryptos who are gambling it as opposed to trading it or investing in it. More so than other asset classes. People like this because it's like race horses and it's like poker for them. And it's a bit of a cult thing as well. So I didn't know that, but I'm learning about it now. Because I just look at stuff as assets and I don't go online and I don't need to know more than that. The concept is enough. Point is, there's a large number of people in this who are also very much invested and a large number of people who love it as a gambling gimmick. It's really a big thing. Plus, there are institutions who more sort of the new ones, like the FTX and everything, that make money doing some movements on this. But this is not, the moves on this do not come from fundamental uses of cryptos increasing in the way that currencies are being used. Not yet. Okay, it is to me the highest risk of all the asset classes, and not higher return, just higher risk. Okay, because every time it goes up, people don't sell and then they lose all their money and they buy at the top. More people have gone broke engaging with cryptos than anything else. If you just put that same amount of money into the stock market, you would have been solid. Right, I'm gonna leave you with that. Thank you very much, guys. Listen, have a great week, and I'll potentially do another one. Any comments or questions, put them into the section below. Okay, thank you very much. Have a good one.